Hello everyone, this is Paul from the APN Academy, and in today's video we're going to be looking at how to identify key levels. Sometimes we refer to these levels as areas of interest or areas of value, right? Depending on the way you want to call it. Now, this particular video is a continuation of the previous video that we did upload. So if you've not watched it, make sure you do go and watch it. Then this one will make more sense to you. But in brief, today's topic is all about identifying places where we want to take your trades from. And these same places are the areas that you're going to be using to determine your take profits, or the same areas you're going to be determining where you're supposed to put your stop loss. So they are very, very important areas, right? So we all need to know how to identify levels which we're going to be using to identify. That's why they're called areas of interest or value, because it's in these areas that we're going to determine what point do I want to take my trades from, or what do I look for in a trade. You don't just look for your rules that you consider take trades from any other place. There are specific areas that you'd like to take your trades from. So these are the specific areas that we're trying to identify in this video. So in case you're very, very new to the idea of levels and all that, I suggest that you first watch the previous video so that you can start from how we identify lower lows, how we identify higher highs the proper way, and then you can come and watch this video. Also, if you've just come across our channel and this is the first video you're watching, please do not forget to hit the subscribe button. So without wasting time, let's just start off. So for you to be able to identify your area of value or interest, or what sometimes we refer to as a key level, the first thing you have to know is the type of market you're in, the type of market movement that the price is making. Are you in an uptrend? All this, we mentioned it in the previous video, so I'm not going to spend a lot of time here. Are you in an uptrend? Are you making higher highs? Or are you in a downtrend and are you making lower lows? Or are you in a ranging market whereby you're making equal highs and equal lows, right? This is the first thing you're supposed to be determining. After determining that, what else are you supposed to go to next? The next thing you're supposed to identify after knowing the type of market movement that the price is making, you're supposed to identify what structure are you trading. Now, there are very many ways people take trades, but why are they failing is because they do not first identify the structure and direction that they would like to take in the market. Whether you're trading order blocks, whether you're trading supply and demand, first identify the type of market movement that is the price is making or the price is taking. Then after that, you will be able to identify structure. When you identify structure, after identifying structure, then you can bring in the rules of entry that you do want, right? So here we have said that first identify the market movement, then we want to identify structure. Structures include turning points, and we know turning points do make up patterns and shapes. We have very many patterns. I want to list all of them, but I'll mention shapes because they're a bit few. So shapes like M's, shapes like W's, shapes like head and shoulders, all these, right? After identifying the market direction and the movement the price is making, then identify a structure that you're going to trade. Without a structure, you won't have a target. Without a structure, you will not have where to put your stop loss, and it will be very hard for you to identify a key level. Now, these are the structures we're going to base on to identify our key levels. I hope we are together. So let's just proceed. Now, these are some of the things that you're going to come across, and these are the most traded price movements or structures that most traders do trade. Now, the first one is the usual one. In case someone is in an uptrend, for example, we have a turning point that the price has made. Then we create this low. This is a downtrend. The price creates this low, creates a lower high, and then pushes down. Now, in the previous video, we talked in detail how you can identify the proper lower lows. The same happens for this type of market movement. If the market is making higher highs in an uptrend, if it makes a high, creates a low, then creates a higher high. Now, most of the traders are either trading such types of markets or they're trading in such types of markets where the market is making equal highs and equal lows, right? Then also, I've put here some 2 examples of structure, and I want to show you exactly how you can identify your key levels or key areas where you can take your trades from. And these same levels, you can use them to identify your stop loss and take profit. For example, if this is your M, we now know the rules of M's if you've been watching our videos. In case you've not watched the rules of M's and W's plus head and shoulders, we have videos that explain all that. You can just look through our videos and watch them. Now, so if this is your M, also we want to see which area are you supposed to be focusing on to take your trade, or from what point would you like to take your trade, or from what point do you want to see that, do you determine that the market has now shifted away from making a sell to start making buys, from the bear market to a bull market? We consider these structures, right? So I've pulled out some of the examples that most traders do use, right? As a trader, that's the reason why we first say that you have to identify the type of market you're in is you have to know what type of trade you want to take. Do you want to take a sell or do you want to take a buy? Without knowing that, whether you want to take a buy or sell, you won't know the type of structure you should be looking out for, right? That's why we said you start with the market movement. Is it making higher highs and higher lows? So that you know in that type of market movement, what structure am I looking for and where? Now, the where part is what we're answering, a key level. We need a key level where we're going to look out for our entry rules. Now, here is where all your strategies come in: supply and demand, order blocks. Without identifying these key areas, those things will be useless. That's why even if you're trading all these fancy new strategies that are coming up, without identifying this structure or the key area where you're going to apply those strategies, you will always lose money, right? So how do I avoid that? To a large extent is by first identifying key areas. So let's start with this first one here, right? And as usual, we're starting with theory, then we shall go to the chart and we'll do it practically. So if the market makes a low, right, and makes this standing point here, and then it goes to make a lower high, and then breaks below. Now, what most traders are focusing at is only this level here, right? Only this level. Now, yes, of course, we expect the market to come and retest this area here, which is true. And the market will come and retest here. But sometimes what hits people is that the market, when the market exceeds here, people think that the market has automatically changed trend from selling, right? So the market can turn from here and exceed and come and turn from here, because also this is a turning point. This is the market made a lower high. We properly know that the market in a downtrend is making lower lows and lower highs, like I've just indicated here, right? This is a downtrend. Now, most traders are caught here. They expect that the market is going to come here and then it continues, right? This is wrong, right? So which in this type of market movement, if you're planning to take sales, you're supposed to mark two levels. The first level you're supposed to mark is this lower high that the market created, this area here. If you backtest why you've been losing money, you realize that this is one of the reasons. Do not only mark this area here, because sometimes the market will not stop here. Sometimes the market on retesting here, it won't stop here. It will exceed, stops here, and then drops down. Still, this is a lower low. The market has created a low, lower high, a low, equal highs, and then drops down. The market is not going to move as smooth as we expect. The same way you see books, right, drawing them for us, that the market will make lower low, lower high, lower low, lower high, like retesting the previous lows and then dropping. That's not true. The market sometimes is going to even test previous lower highs or previous higher lows, right? So if you're marking your key levels where you would like to take your trades from, make sure you're not only marking in a downtrend, do not only mark this previous lower low, but also mark the previous lower high. Now, if the market takes out this, then you can know that the market, possibly buyers have come in, right? This structure here has completely been taken out. So there's a possibility we just expect a retest either here or here before we do continue. Are we together? If you're marking key levels in a downtrend, do not only mark this turning point, do not only mark the lower low, also mark the lower high. This here gives you, because sometimes the market may not only just stop here, or it may not also reach here. It may just stop around here. It may create its new lower high here. Why? Why is it a lower high? Because this lower high is higher than it. So it also becomes a lower high, and then it continues down. So this is also a lower low, lower high, lower low, lower high, lower low. So when you're marking key areas, especially for those who are trading, who are waiting to identify reversal points, most of us are being caught out of here. So this becomes a key area. This becomes a key area. Now, when you're putting your stop losses also, because we said this helps us to also identify our stop losses and targets. Now, when we're putting our stop loss, we want to put our stop loss above this structure, because what most traders are facing, the problem most traders are facing is they will identify a lower low like this one here, right? When you identify this lower low here and the price approaches here, most don't even look for change of trend or loss of momentum and all that. We have spoken about all these in our previous videos. Please make sure you check out our previous videos because all our videos are related, right? We do not post anything that we do not do ourselves in the market. We are posting what we do use in the market. So most times people do not even wait for change of trend here. They just put limits and then they take trades. What happens? They put their stop losses up here and the market is going to come and trigger all these stop losses and then come and stop here, right? That's why I'm emphasizing that if you're marking key areas, make sure you're marking also this area with this one here. Do not only mark this one. Sometimes the market will stop here, yes. Most times the market likes stopping in the middle here, and also it will like to come and touch here, then to go, because it is sweeping out, it's collecting, or what we call grabbing liquidity in this area, and then it will continue. Now, the same applies in an uptrend. If you're marking a key area in an uptrend, because we're making higher highs and higher lows, right? Do not only mark here. Most of you have crammed what they've written in books, that when the market breaks this turning point, we expect the market to come and retest it and then it continues. That is not true. What are you supposed to do? Mark this area here and also mark the higher low that push the market up. Why? Because sometimes the market will come and that will not only stop here, but it will also come into this space, sometimes into this space, or even it can go an extra mile to reach this previous higher low before continuing up. Are we together? So this is how we identify if you're, in case you're trading higher highs and higher lows. Some people are retracement traders, some people are continuation traders. If you're a trend trader, make sure you put that into practice. Make sure you backtest that. Of course, we're going to go to the charts and we shall see how it practically happens, right? Now, let's go further and also look at those who are trading shapes like this one here. Sometimes we have seen a double top, right? This is a double top. There are 3 types of M's. We have done it in our previous video about M's, right? So make sure you check it out. I've just brought out one here, but the rules are the same. So we know that these are double tops and we have broken a turning point. Now, sometimes, not sometimes, but most times traders only focus on this as a key area, right? This alone is not a key area. Yes, it is a key area. Sometimes the market will come and stop here and then continues down. And then you put your stop losses here in this space. What happens sometimes, the market will come and test here to give us what we call a triple top, and then it drops. Or sometimes it will come and stop into this area here. All this area here is giving us provision for a possibility of a lower high, right? Do not only mark the neckline area if you're trading these structures. Also mark the double top area, because this all is giving us space, this area here and this one here. The market can stop here, and also the market can stretch up to here, or it can just come and make a new lower high here and then it continues. This is a valid lower high, because on a downtrend, the market can create a lower high wherever it wants. But how do you determine where? You have to give yourself a range. Do not be specific, because no one knows. No trader should tell you that the market must stop here, right? So even the liquidity providers, if you're to check their reports that they do give to the commissions, their reports that are somewhere on the sell side on the same instrument. For example, let me give an example of gold. You may find some hedge funds have bought gold, some hedge funds have sold gold. So even the liquidity providers and hedge funds, the big hedge funds that we're trading against, or we are trading with but have more money with us, they do, sometimes they're not on the same side, right? So make sure you're just getting a parameter, and the best trades will always be when you take them in between these. So this is a key area, and also this is a key area. So what makes the difference is you should look for change of trend. And how do we do that? We have shown in the previous videos that you have to look for loss of momentum. Look at how the candles are approaching those levels you've marked. For example, here we've marked this key area, or we've marked this key area. So as the market approaches this area, watch how the candles are approaching. Watch how prices are approaching. Also here, watch how prices are approaching. Or when it is in between here, watch how prices are approaching that area. Then you can take your trade. So this makes this a key area. This makes this a key area. Let's also look at the W. It's just the opposite. So if you're marking for the W case, this is a key area, the neckline, and also mark this bottom here where it created this double bottom. because the market can come, retest here and continue, or which most times the market likes doing. It likes coming to stop in between here because they know that most of you are taking your trades here and then going. And also they know most of you are trading what you guys are calling order blocks, supply and demand. You have your order blocks around here where you say that an order block is where the move started. So that's why most times it will stop in the middle here and then go. Or sometimes it will come, make a long wick, trigger all your stop losses, and then it closes here, right? This still brings me back to, after marking your levels, do go and check how price has approached that level. Even if you're trading an order block, do not just trade candlestick patterns alone. Candlestick patterns alone are not enough. Make sure you check how price is approaching that level. Are we together? So this is how we identify key levels, right? Combine it with how you identify previous lows and previous higher highs. Then I'll put in this, add in this concept of your area of value, or what we call area of interest. Because before you think about taking a trade, before you apply all your strategies that you have, whether you're trading using indicators, whether you're trading using order blocks or supply and demand, or even market structure itself, make sure you're marking these key areas the same way I've showed you, and your risk will go down and the rewards will be up, right? So if you've understood this or you've not understood, you can put a comment below. Most times we do respond to all the comments, and then you can also tell us what you've been doing wrong, or if you've been noticing this happening to you, you can let us know in the comment section. Then this is the theory part. Let's just go to the chart. Let's take our example on gold. And today I'm using H4. I'm not using a big time frame because most of us tend to face this problem during entry time frames and not during analysis. So let's identify starting from a significant low, a certain significant low, and then we can take on from there. So let's assume that I want us to do this example from here until where the current price is, which is down here. So we are going to identify this low. We're going to identify significant lows. After identifying significant lows, I'll show you exactly which are the key areas that you would be considering. Now we say that, let's say this is my low, the first low that we're going to start with, this one here. The market broke it, right? Now, where's our next significant low? Where's the next significant low if you watched our previous video? If you say this one, you're wrong. The next significant low is this one because Standard gave us a push to give us a retest to the previous low. Remember, we said that when the market makes a lower high and breaks through, we expect the market to give us a retest to this level at least. And which push is that gave it is this previous low here, right? So we are going to mark that area. Let's just mark it. So I'm going to mark it like this, right? Now, again, the market, what did the market do? The market came, retested here, no change of trend to show you that we're supposed to be taking sales. You can clearly see here, the market continued up. Now, this is what I've been explaining today. Now, most people would be looking for buys here. They'll say, now gold is going to start buying because that's broken here. You come on the retest, you're looking for order blocks. There's an order block here. You start looking for buys. What did the market do? It gave you a retest to this neckline and then took out all your stop losses. That's why I'm saying that the first thing you have to do is to identify key levels correctly. The levels that you would like to use your strategies in, whether you're using order blocks or you're using supply and demand or indicators, no matter the type of strategy you're using. First, learn how to identify these key levels correctly, right? So for example, we properly knew that in this situation, we are still in a bearish momentum because we have not taken out the previous lower high. Which one is the lower high? The market created this low, created the lower high here. Then the market is still in the process of creating a low, right? Because we have taken out this area, yes, but we are going to look for a turning point that has to come back and retest to this point here, right? So let's keep scrolling. Let's keep going still. Let me just extend like this. I hope you guys will be able to see. So let's just extend this, right? Now, since this is historical, we're doing something that already happened. It's going to be a bit easier for us, but if it has not happened, it will be slightly tricky. So if it's a bit tricky for you, back test it over and over so that you can be able to get the concept. Now, the point that gave us the retest to this point here is which point? It's this previous low here that the market pushed from this turning point here. You can either mark this area here or you can mark this whole area like this, because this is the point that gave us the push to retest the previous low, right? This is the major turning point that gave us the push to retest here. Why? This other one did not give us the push up to here. This other one did not give us the push up to here. Remember, we're looking for a turning point that has strength and has more presence of buyers to retest here, right? So as long as the market has not taken out the previous lower high, in this case, because on a downtrend, the market made this low, right? So we're looking for a low that is retesting here. So this would be my key area, and this would be my key area. The moment the market has not taken out this, it can play in here and then continue down. This is the reason as to why we made this the video today. We need a turning point that can take out this area, and then we can know that the market has now shifted from making lower lows to making highs. The moment the market is still playing within here, because it made a low, right? Lower high, then pushed down. The moment it does not take out this point here, it does not come and break above it, it can still come back and play in here the same way it did. It made something like a low. Most of us would consider this as a low. Came up here, right? Grabbed many buyers here and then dropped down. Now, in the process of dropping down, also it's creating insignificant lows. Are you seeing this? Yes, there are lows, but they're not key areas that you can consider to take trades, unless you are a scalper, because scalpers are looking for very few pips. So scalpers could mark all these turning points, but still, as a scalper, you would like to take trades at key levels that are not going to put your trade at a very high risk, right? So we're looking for turning points that are significantly pushing price to retest the previous low, because we know the rule is if I make a low and a lower high and I break this, I expect the market to give me a little retest here. The only condition I told you guys is that unless this move down is impulsive. The same applies to uptrends. If the market is making a high, makes a higher low, then it breaks above, we expect to come and retest this point unless this move up is impulsive. And how do we treat that? By applying Fibonacci retracement rules. And we have a video on that. So if you don't know how to apply all these rules, make sure you check out the video, right? So this is how you avoid all that. And this is how you mark your key areas. Now, just check this. To show that this is a key area, what did the market do? After the market coming here and touching here, sorry, it came and retested this area and reacted to it because it is a key area, right? Why is the market just bypassing all these levels? Yes, this sometimes reacts to them, but not significant. Here, the market just came, broke through and touched this area, and then again broke through this level, if you had considered this area here, right? So we should learn how to mark key areas properly. This one, we've done it in the previous video, but today's video, we're focusing so much after marking this key area, where else would the market take out? For example, if the market makes this low, as long as it has not taken out the previous lower high, right? We have this low, we have this low. Now, in this case, we have made this low here, and we have made the lower high. Now we have broken below where price is currently. Let me just show you. Currently, the price is here. The moment price does not take out this area here, it can do anything in between. It can come, play here, and then still continue down. Most traders are facing problem with knowing the fact that price needs to have liberty to do whatever it wants. You're forcing price. You're assuming what price should do. Price is not like that. We do not control the market. So price can, since now we have made this is our low, this is our new low, this is our new lower high, and the market has made a low. So price can still come back. Most of us expect to come and stop here, but price can come back and play within here and then continue. Now, most traders will think that it has broken above. Let me just delete this. Since this is a low, this is a lower high, this is a low. Now, most traders will think if, let's assume price comes and doesn't stop here and breaks above, because this is a low, this is a high, right? This is a lower low, this is a lower high. This is a new lower low. Now, most traders will think if the price retest comes here, and let's say they on a stop here, and then instead breaks above, what will they be looking for? They'll look for retests here to this level. They'll assume that now the price has taken out the previous lower low, then they start buying. That is not true. It's only true when the market takes out this previous lower high. Then on the retest now, we can now look for all the strategies, either order blocks or supply and demand and all that. You should now apply them only if the price has taken out this previous lower high. If you can apply all these things that were spoken in this video, back test them, you'll be able to see sense, and you'll be able to see why those strategies are not working, yet people are regarding them highly, the order blocks, supply and demand, indicators and all that. Just try putting or implementing what we have watched in this video, and you'll see a change in your trading, no matter the strategy that you're using, right? So if you found value in this video, do not forget to hit that thumbs up button. And if it's your first time, do not forget to hit the subscribe button and make sure you turn up the notification bell, because we release such videos every week, right? So have a great time.